It feels like every single day there's a new headline, right? Something screaming about the end of the US dollar. You hear the buzzwords, de-dollarization, the rise of BRICS, a new global currency. It's just this constant drumbeat of doubt. But what is actually happening to the world's most powerful currency? Okay, let's really get into it.
I mean, that's the big one, isn't it? The trillion-dollar question. Are we really watching the final days of King Dollar? Or is all this chatter just, well, just noise?
Because the truth, well, it's not a simple yes or no. The reality is this fascinating story of deep contradictions. A world where the dollar is absolutely weakening in some areas, but in other, really surprising ways, it's becoming even more essential. And that tells us everything about the complex new world we're heading into. So, first things first, let's be really clear about something. By one absolutely crucial measure, the dollar is still the undisputed champion of the world. No question. For the day-to-day business of just making the world go round, nothing else even comes close. In this slide right here, this shows you the sheer scale of that dominance. We're looking at the SWIFT network. Think of it as the plumbing for all of global finance. And look at that. The US dollar handles nearly half of all payments. That's more than the euro, the pound, and the yuan combined. So when it comes to the actual nuts and bolts business of the world, the dollar is still the default. It's still the language everyone speaks. But, and this is a huge but, if the dollar is the king of transactions, its status as the world's #1 savings account, that is a very different story. And this is where we start to see what some analysts are calling a tectonic erosion of its power. The very foundation of its kingdom is slowly but surely shifting beneath its feet. Take a look at this. This chart shows you the percentage of US dollars tucked away in the vaults of the world's central banks. It has fallen a lot, from a peak of 72% all the way down to 57%, which is a level we haven't seen since 1995. So here's the key takeaway. Countries are still using dollars, for sure, but they are increasingly choosing not to save in them. That's a huge difference. And this quote, this just captures the whole shift perfectly. It's not a collapse. It's not one single rival suddenly taking over the throne. No, it's a move toward a more diverse, more fragmented system where countries just have more options. A multipolar world. So who are these challengers knocking at the gate? Well, they're not just coming from one direction. They're coming from all over, through brand new institutions, through some seriously disruptive technology, and even through the return of a very, very old rival.
Okay, first up, on the institutional front, you've got China. They've built their own payment system called CIPS. Now, let's be real, it's still tiny compared to SWIFT. I mean, CIPS processes in an entire year what the dollar-based system handles in about 2 weeks. But that's not the point. The point is that it exists. It's a direct, state-backed alternative, and boy, is it growing fast.
How fast? It saw over 42% growth in transaction value just last year. And that momentum is being fueled by countries like Russia and other BRICS partners who are actively, desperately looking for ways to do business outside of the dollar's shadow. But the even bigger threat might not be institutional, but technological. Enter Project mBridge. This thing is a genuinely revolutionary idea. Instead of just sending messages back and forth through a system like SWIFT, it lets countries like China, the UAE, and Saudi Arabia settle payments directly with each other, using digital versions of their own currencies. Think of it like a peer-to-peer network, but for entire nations. It completely cuts out the middleman. And for decades, that middleman has always been the US dollar. This makes payments basically instant and up to 50% cheaper. This isn't just an alternative. It's a fundamental redesign of how global money moves. And then there's the dollar's oldest rival of all, gold. As geopolitical tensions keep rising, central banks are just flocking back to the ultimate neutral asset. Get this, a stunning 43% of them plan to add even more gold to their reserves this year. So why the sudden gold rush? Simple. Gold isn't controlled by any single country. It's nobody's liability. It can't be frozen by sanctions. And we're seeing this massive trend of countries physically moving their gold bars back home, pulling them out of vaults in New York and London. It's a huge vote for financial independence. But here's the thing. Perhaps the greatest threat to the dollar doesn't come from China or new technology or even gold. No, the biggest threat, it comes from within the United States itself. The dollar's strength has always been backed by the credibility of the U.S. economy. And that credibility, it's being seriously tested. And what's the reason? In a word, debt. At over $30 trillion, the U.S. federal debt now equals 100% of the country's entire economic output for a whole year. I mean, just think about that. That's a staggering figure that makes international investors pretty nervous. And what's really terrifying is that the interest payments on that debt have now hit $1 trillion a year. $1 trillion! It's now the second largest expense for the entire federal government. This is how you get into what they call a debt spiral, where you have to keep borrowing more money just to pay the interest on the money you already borrowed. It's a vicious cycle. And this isn't just some abstract problem for the future. In 2025, all these worries about fiscal policy, huge new spending bills, and even the independence of the Federal Reserve, it all came to a head. It caused a massive drop in foreign investment and one of the worst periods for the dollar index in half a century. The rest of the world is watching, and you can bet they're getting worried. Okay, so we've got foreign rivals, tectonic shifts in how countries save, and some serious trouble at home. The writing seems to be on the wall, right? But here comes the great paradox of this whole story. A powerful, completely unexpected force that is, almost accidentally, reinforcing the dollar's rule. You'd think so, wouldn't you? After everything we've seen. But what if? What if the next generation of finance, the very technology that's supposed to replace the old system, what if it's actually being built right on top of the dollar? And this right here, this is the twist. Just look at the world of stablecoins. These are the digital currencies that are absolutely central to crypto and the future of digital finance. Nearly 99% of this massive $220 billion market is pegged to, you guessed it, the US dollar. This is the great contradiction right here. While the world's central banks are actively trying to get away from the dollar, private innovators and just regular people in emerging markets, they're adopting dollar-backed stablecoins like crazy, often as a safe haven from their own currencies. So the digital future is, for right now, being dollarized. So what does this all mean? The crucial takeaway is this. We are not witnessing the death of the dollar. What we are seeing is the end of its monopoly. The world is shifting to a multipolar system where the dollar is still the most important currency, but it's no longer the only game in town. And this new reality leaves us with a really critical question. As this old unipolar system gives way to a more fragmented world of competing currencies and technologies, the very definition of financial safety is up for grabs. So in a world like that, what becomes the new definition of safe money when the one true king has to share his throne?